Good morning, and thank you all for joining. Welcome to NCB Financial Group's third quarter investors brief. I am Dennis Cohen, Group CFO and Deputy CEO, and with me on the panel is our President and Group CEO, Mr. Patrick Hilton, and our Group General Counsel and Corporate Secretary, Dave Garcia. I will discuss our financial results released yesterday, after which our Group CEO will share his thoughts. After his comments, we, along with the executives online, will respond to questions received. For the 9 months ended June 2021, we reported net profits of $13.9 billion, a 31% or $6.4 billion decline from the prior year. We have made significant strides in our digital agenda and continue to see increased use of our digital channels. In this regard, we continued our investments to accelerate digital adoption. These initiatives continue to reinforce the financial ecosystem we are building, allowing the group to provide safe, simple, and secure integrated platform to seamlessly transact financial services. Within the context of the pandemic, we have delivered commendable results, and based on the initiatives we are undertaking, we believe we are poised to create greater value for our stakeholders. Despite the increased profits for the quarter, a dividend was not declared at yesterday's board meeting. This after careful consideration of the continued impact of the pandemic on our regional economies and the group, along with the ongoing uncertainty. We believe it is optimal to continue bolstering our capital base and reinvest in our transformation as we prepare for a post-pandemic environment. Of course, we will continue to reassess with a view to resuming our tradition of consistent dividend payments. In light of the current environment, the executive directors, that's myself and Mr. Hilton, agreed to surrender our NCB Financial Group shares held as a part of a previously agreed compensation arrangement. This decision was taken to relieve the group of the attendant costs arising from that arrangement. The surrendered shares are held by a custodian under an existing custodial arrangement, and the impact of this transaction was included in the interim unaudited financial statements. The shares are eligible for future distributions to executives, including both of us, and I assure you that our revised compensation arrangement continues to be aligned with the group's financial performance. As indicated earlier, the group reported net profits of $13.9 billion for the 9-month period, with $9.9 billion attributable to our shareholders, representing a 33% or $4.9 billion decline from the prior year. Operating income experienced growth of 12% or $10.2 billion to $91.9 billion. Banking and investment activities recorded $73.8 billion for the period, growing by $15.4 billion or 26%. Gains from foreign exchange and investment activities increased fivefold over the year to $12.3 billion as bond and equity prices continue to show year-over-year improvement and the financial markets gain momentum consistent with the improved economic outlook. During the last financial year, we took a conservative approach to provisioning, adjusting our ECL assumptions to the worst-case scenario with an outlook of a continuation and possibly worsening of the pandemic. Currently, the outlook is more favorable, resulting in a credit impairment reversal in the quarter. This has created a 61% improvement in credit provisions, declining by $3.5 billion to $2.2 billion for the current period. Various sectors remain severely impacted by the effects of the various government restrictions imposed to curtail the spread of the virus. General business activities continue to be impacted, particularly tourism, travel, and entertainment, resulting in subdued transaction volumes impacting net fee and commission income. Tightening interest spreads left net interest income relatively flat compared to last year, despite growth in loan and investment portfolios. The net result from insurance activities declined by $5.3 billion or 22%. This largely reflects the impact of the lockdown in a number of territories, including Trinidad, which restricted movement to essential services and significantly curtailed consumer and business activity. Operating expenses of $71.6 billion grew by $11.9 billion or 20%. Staff costs contributed $4.6 billion to this growth due to annual increases in salaries and benefits and also incentive payments related to the prior year. Investments in our digital and strategic transformation initiatives, along with our accelerating a number of activities to improve service delivery and enhance alternative channel offerings, contributed significantly to this increase. We have also ramped up our cybersecurity expenditure to safeguard our electronic systems and customer data, which continue to be of utmost importance given our digital-first philosophy. These increased costs outpaced the growth of revenues, resulting in our cost-to-income ratio being 76.12%, up from 68.38% in the prior year. Lower profits led to a deterioration of our return on assets and return on equity, down to 1.01% and 8.45% from 1.64% and 13.19% respectively in the prior year. You will note that 6 of our 7 business segments recorded year-over-year growth. Our life and health insurance segment improved by $5.1 billion, contributing $13.9 billion to operating profit. Guardian benefited from improved market activity, recording increased gains from investment activities of $6 billion over the prior year. Wealth and treasury segments also recorded improved performances due to the rebound of bond and equity prices, contributing $8.5 and $7.3 billion, up $1.9 and $1.7 billion respectively. Lower ECL provisions previously mentioned contributed to improved performance of the other banking segments. General insurance recorded net results of $5 billion, decreasing by $2.5 billion from the prior year due to increased operating expenses and subdued revenues. Looking briefly at the components of our financial statement of financial position, our asset base was $1.89 trillion, an increase of $195 billion or 11% over the prior year, driven primarily by growth in our investment securities loans and amounts due to other banks. Our capital increased by 5% to $156 billion due to increased fair value reserves and retained earnings. Net loans now surpass $500 billion mark, recording 13% increase over the prior year. Customer deposits continue to experience strong growth, increasing 17% or $95 billion to now stand at $641 billion. Policyholders' liabilities grew to $435 billion, 9% or $36 billion increase over the prior year. We should also note that all our regulated entities exceed the applicable capital and liquidity regulatory requirements. Ladies and gentlemen, as we shape our operations and tackle the challenges posed by the pandemic, we are optimistic about our prospects and stand ready to continue our legacy of exceeding the goals and ambitions of our employees, customers, and stakeholders. In closing, I'd like to express my sincere appreciation and gratitude to our team for their tremendous effort, and to our stakeholders and customers. I thank you for your continued support and trust. I now hand over to our President and Group CEO, who will share his thoughts. Thank you.
Good morning to our directors who are participating by way of live stream, our shareholders, both locally and across the region and in the diaspora, team members of the NCB group, including those here in NCB itself, in Guardian, in Clarion, right across the region, members of the media, members of the analyst community, and other guests. I want to join Mr. Cohen in thanking you for joining us for our financial year 2021 quarter 3 investors briefing. During my brief statement, I intend to take us through NCB Financial Group's outlook for the next few months as we look to close out our financial year on a high note. I think we'll all agree that 2021 has no doubt been a historic year. We have seen in this year what pushing boundaries and doing the impossible can do, what it can achieve. Whether it is accelerating the speed to market of vaccines, it is making civilian space travel possible, or it is executing the flight of the world's first flying car. These activities and more demonstrate, friends, the quote from Napoleon Hill which says, "Whatever the mind can conceive and truly believe, it can achieve." So whether that is conceiving how to triumph over challenges or conceiving how to disrupt and change the world, the one thing we do know is that there are no limitations to the mind except those we acknowledge. And so pushing boundaries and attempting what others may conceive as impossible is also a part of the course and the legacy for NCB Financial Group as we continue to accelerate our transformation into a world-class Caribbean financial ecosystem so as to ensure our success on a sustainable basis. As we are in the Olympic period, I take this opportunity to draw parallels between what it takes to succeed on the Olympic stage, on the world stage, and what it takes to succeed in business. Successfully operating a business in this day and age requires 1, speed and endurance, 2, resilience and determination, 3, willingness to disrupt the status quo and make choices that are uncomfortable. Let me start with speed and endurance. With respect to speed and endurance, we have seen that sprinters now have to engage in significant endurance work. At the same time, we have seen where marathoners engage in sprint-specific endurance training so as to improve their ability to maintain sprint velocity for as long as possible. It is no longer one or the other. In 2022, NCB Financial Group will celebrate 185 years, with its roots dating back to 1837, which demonstrates our endurance. We have overcome many challenges and many changes along the way. In addition to that, our current strategic transformation in progress, which is dubbed NCB Accelerate, appropriately because we are committed to accelerating the pace of change within our organization. Some of the changes are not yet visible, but the seeds have been planted and continue to be planted. And we will always remember that the day you plant the seed is not the day you eat the fruit, but we're looking forward to it. Resilience and determination, the second set of characteristics I mentioned earlier. With respect to resilience and determination, we have seen athletes overcome career-ending injuries, return from giving birth, or continue in spite of being past a certain age and still performing at the highest levels. Overcoming these perceived challenges is not just a result of talent, but rather sheer resilience and determination along with an indomitable spirit. This is what separates the stars, ladies and gentlemen, from the superstars. Our legacy at NCB Financial Group includes overcoming many challenges through resilience, through determination, and so it is with confidence that I say we will overcome the challenges presented by the pandemic because we are resilient, we are determined, and we have the indomitable spirit. Willingness to disrupt the status quo and choose things that are uncomfortable. Finally, with respect to being willing to disrupt the status quo, high-performing athletes are willing to not just train harder, but to actually change their routines completely in order to take their performance to the next level. Changing your routine is extremely challenging and is in and of itself a test of resilience and determination. Similarly, at NCB, we are willing to disrupt our existing business model and to engage in continuous disruption and transformation to make way for future success. It is within the context of these three characteristics of high-performing athletes and companies that I want to share with you this morning some exciting things on the horizon for the NCB Financial Group. The first one is the Central Bank Digital Currency, CBDC. According to the Atlantic Council's Central Bank Digital Currency Tracker, as of July 22nd, 2021, 81 countries representing over 90% of global GDP are now exploring the development of central bank digital currencies. A total of 16 other countries are in the pilot phase or have launched, and another 15 countries have CBDCs in development. Jamaica is set to launch a pilot by September, and NCB Jamaica Limited will be the first financial institution in Jamaica to be onboarded by the Bank of Jamaica to test this new system. The central bank digital currency creates a foundation for greater financial inclusion and digital commerce, eliminating some of the frictions we have today in terms of payments that are not real-time or 24/7 across financial institutions. As a leader in digital innovation in financial services, we at NCB welcome this change that will disrupt our financial services landscape for the good of our customers. The second initiative I want to speak a little bit about again is NCB Merchant Bank. In the last quarter, NCB Capital Markets strengthened its commitment to deepening the financial markets across the region. NCB Merchant Bank in Trinidad and Tobago, which is formerly NCB Global Finance, became a member of the Trinidad and Tobago Stock Exchange and thereby one of 7 stockbrokers in Trinidad and Tobago. Like Jamaica, the Trinidad government recently introduced legislation to reduce corporate taxes to 0 for 5 years for companies who list on their junior stock exchange. This is modeled after the Jamaican initiative that has been successful in increasing the number of IPOs for private companies. NCB Merchant Bank will focus on helping second-generation owners of family business list or IPO on the TTSE. NCB Capital Markets, my friends, is fast becoming the one-stop shop for asset and wealth management and investment banking business across the English-speaking Caribbean. The next initiative I want to speak a little bit about is digital education. The NCB Foundation has recently pivoted to prioritize and focus resources and investments on mostly digital initiatives with a $100 million committed in this financial year alone on the scholarships and grants for students and educators. The scholarships and grants will primarily support students pursuing degrees in software engineering, data science, animation, etc. We are also continuing our Level Up Grant program, which offers grants to unemployed persons to take short digital courses to level up and through that process become gainfully employed. Our last cohort has earned over $80,000 US. In addition, we recently signed a partnership to support the Amber Group and HeartTrust NTA Coding Academy and the Ministry of Education Youth and Information Coding in School pilots. We are doubling down and investing in human capital so that we can digitally transform. Next, I want to talk about an initiative, an app we are developing called Link. And so I'm very excited to speak about Link. It is the newest member of the NCB's family of financial products. Link is really a digital payment app solution similar to Venmo and Cash App that customers will be able to use to send and receive money, to make payments at merchants and other stores. Leveraging electronic KYC and biometrics, customers can sign up for their wallets in minutes. The idea is if you have a phone, you can link. Vernon James, formerly of NCB Insurance, is the CEO of this venture. We have invested a lot in developing this world-class app. We are currently testing with friends and family, but stay tuned for our launch very soon. I want to assure you, fellow shareholders, of our unwavering commitment to realize our financial year 2024 aspiration to become a world-class Caribbean financial ecosystem while remaining true to our purpose, as we have stated, of empowering people, unlocking dreams, and building communities. We will continue, as we have before, to embrace the obstacles that come our way. We will operate with speed and endurance. We will operate with resilience and determination. We will operate with an indomitable spirit and with a willingness to disrupt the the status quo. As Muhammad Ali once said, and I quote one of my favorite quotations, "Impossible is not a fact, it's an opinion. Impossible is not a declaration, it's a dare. Impossible is potential. Impossible is temporary. And yet impossible is nothing." So I want to thank all our team members. I want to thank our customers. I want to thank our shareholders for continuing with us throughout this sprint marathon. The seeds have been planted and are bearing fruit. We shall persevere and endure until we are victorious. I give you that assurance, and I thank you for listening. I'll hand you over now to Mr. Garcia for the question and answer segment.
Thank you, Mr. Hilton. We had quite a few questions that came in relation to the non-declaration of dividends for this quarter, but I think that, Mr. Cohen, in your remarks, you would have answered several of them that came in. One or two that remain, I'll put to you. There was one for Mr. Hilton from shareholder Stefan Flowers. He has asked if any consideration might be given to reviving a dividend reinvestment program for NCB.
Certainly something but we'd have to look at reviving it at a point where dividends are being paid, clearly, for the dividends to be reinvested. But certainly, that's, I think that would be a good thing, and something that could be beneficial for both shareholders as well as the organization in terms of its demonstration of sustainable confidence and so on.
Thank you, Mr. Hilton. And another question from Mr. Flowers. This one was actually directed for Mr. Cohen, but I think either of you could take it. The question is whether the company would ever consider share buybacks rather than paying dividends, taking into account the differing financial considerations related to a buyback. Mr. Cohen, you want to take that?
Sure. Well, that is not something we have actually considered. Typically, that happens clearly in many more developed markets. It's not been a strategy we've considered. It is something we could contemplate and see if there are any benefits to our shareholders to actually engaging in such a strategy. But at this time, that is really not on our radar.
All right. Thank you, Mr. Cohen. Another question for you, also from Mr. Flowers. How does management approach and prioritize capital allocation decisions, both at this current phase in the company and taking into account the outlook in the future?
Okay. Well, technically what happens internally is that decisions regarding capital allocation clearly start first at the level at looking at exactly what we require or what is required to run the business. We are constantly considering what is required to meet our regulatory requirements, to continue our business. We're constantly looking at what are the risk factors and the extent to which the volume of capital required in order to meet the inherent risk in our day-to-day management of the business, and also looking at the returns of the various opportunities that are presented on an ongoing basis, and also measuring those in relation to what we believe is required to give our shareholders what we consider to be an appropriate return on their investment. Those are the factors which invariably go into the equation, but clearly matters related to capital, matters related to regulatory requirements, matters related to the operations of the business tend to take priority, after which any residue are then looked at as an opportunity to redistribute to our shareholders or to be used in some other appropriate manner.
All right. Thank you, Mr. Cohen. We also had a number of questions come in, both for the briefing and since the earlier release in relation to the share surrender that was done a couple of weeks ago. You have addressed a number of them, I think, in the remarks that you made earlier. One aspect, however, that remains from some of the questions is as to why yourself, Mr. Cohen, and Mr. Hilton would have agreed to surrender shares which you held outright. So I think you addressed the question of why the company would have been interested in the change in the arrangement, and the question is really why would you gentlemen have been interested in it as well?
Well, I think that's a simple question, Dave. Let me tell you, as I mentioned in my remarks, we are in a challenging time, and surrendering the shares would have relieved the company of the attendant costs with actually providing the benefit. It helps the company, and what's good for the company is good for us. As I mentioned earlier, we are aligned with the company. Our revised compensation arrangements are also aligned with the performance of the company. And in effect, what's good for NCB Financial Group is also good for us.
Okay, thank you, Mr. Cohen. All right, another question here from...
Sorry, I'll just comment, one other comment. I think it was important for us to give a tangible demonstration of the owner's mindset. Right? Typically, an owner of a business, if a business is going through a period where the environment and so on is challenging, is willing to make adjustments, which might not in the short run be to their own benefit, but is to the benefit of the company. And because of our alignment and because of our way of thinking, our philosophy, as Mr. Cohen mentioned earlier, once it is for the good of the company, it is also for the good of us.
All right. Thank you, Mr. Hilton. You can take the mask back off, sir. I have a couple more for you at this point, since you've opened up your mic. Charlie Munger is quoted as saying, "Show me the incentive and I'll show you the outcome." With NCB's ambition to accelerate and to create global impact, what reassurance can shareholders have to help them feel confident that the company and its staff are being just as aggressive in their focus on ethical practices, fairness, and discipline? That question from Mr. Flowers.
I mean, I think it's a brilliant question. And, there's a lot of talk and so on about the importance, because companies have recognized it over time, of addressing different stakeholder interests, right? Which includes all the various parties you just mentioned. But beyond that, for a business to be sustainable, right, it has to have credibility. For a business to be sustainable, it has to have a great reputation. For a business to be sustainable, it has to have character. For a business to be sustainable, it has to conduct itself on a sustainable basis in an ethical and prudent manner, so that all of those considerations, all of those characteristics are important to the building of a successful and sustainable business. We have demonstrated it over many years, not just in terms of words, but in terms of action, in terms of the positions we have taken in difficult times, in controversial times, which is really when you see the true measure of a man or the true measure of an organization. And we are committed to that path because we recognize that that path is in our interest, as it is in the interest of all our stakeholders, and there is that alignment. We don't know any other way to do business.
Thank you, Mr. Hilton. And we have a question here in relation to the integration of the NCB insurance portfolio, it having been transferred to Guardian. I don't think Mr. Ravi Tiwari is on, so we can maybe throw the question to you, Mr. Hilton. Am I right? We can throw the question to you, Mr. Hilton, as the chairman also of Guardian. And the question is really as to how that integration of the portfolio into the Guardian portfolio has been going, and what advantages have been extracted in the period since that portfolio transfer.
So I'll say that it has been going relatively well. There have been challenges, but not unexpected, quite frankly. The truth is that whenever there is significant change, you're going to have challenges, you know. In information technology transformation, they call it changeover crisis, right? But there have been, I would say, generally, the balance of advantage has been very positive. There are some teething pains that have to be worked through when you have the integration of anything, but the teams are committed to working through it. They have been making significant progress where that is concerned, and we expect that those will very soon be history. So, you know, when one looks at the transaction, one will say that it was the right thing to do at the right time. Subsequent events have supported that. We have started to see some of the benefits which we had anticipated in terms of reducing cost per policy, in terms of, you know, opening up new opportunities for new business and so on. And the staff have been busy executing on those. So I would say that it has been, overall, I'll describe it as a very successful transition and transfer of the portfolio from NCBIC into Guardian. And our expectation is that we'll be able to create significant more leverage going forward, which will be to the benefit of both organizations and ultimately, of course, to the NCB Financial Group.
Right. Thank you, Mr. Hilton. We have some additional questions on some of the segments. So let me turn now to some questions for Mr. Septimus Blake in relation to NCBJ, that's the bank. A question from Mr. David Rose, and I should indicate that the last question that we got was also from Mr. Rose. So this question for Mr. Blake: amidst the shifting governmental response to the pandemic, including mainly the use of curfews in Jamaica, what has been the bank's stance regarding loans to sectors which are more susceptible to sharp impacts from the shorter operational times?
Thanks for that question. We continue to take a comprehensive view of all of the sectors, and certainly we have seen the impact of COVID-19 in respect of the reduced level of business activity, and you're seeing it right across the business lines. And so we continue to monitor it. We have seen recovery, you know, post-March of 2020. We are not yet back at pre-COVID levels, and we don't forecast that to happen until probably, you know, the end of 2022 or first quarter 2023 before we get back up to pre-COVID levels. And so we continue to monitor the various activities of our customers, and you know, we're seeing the impact, as an example, in the fee and commission income segments, especially in our card issuing and acquiring businesses, where a reduced hours in terms of operation, immediately results in a reduction in transaction activities. So we continue to monitor that, and we continue to provide the necessary support to our customers.
Thank you, Mr. Blake. And another COVID-19 related question for you. The group experienced its first credit impairment reversal in several quarters. Does this indicate that NCBJ, as the main bank within the group, that NCBJ's provisions were extremely conservative, and that it is the stability of the credit portfolio that is now leading to these reversals?
So I'd say we do an objective assessment. The institution would have come into this crisis in a fairly strong position. I believe that we have, in a sense, generally absorbed a significant amount of the shocks, due in part to what I call prudent reserving, and so we continue to be prudent. We took a look at the economic outlook in this for the rest of the financial year, and relative to the same period last year, when we expanded our provisions, we felt that, by an objective assessment, the macroeconomic outlook is improved relative to last year. And so that's what is reflected at the macro level and flow through in terms of the ECL models. So at the micro level, we continue to be prudent in terms of maintaining those provisions until we feel that the economy would have sufficiently recovered and our customers would have in a sufficiently recovered position. So we continue to be prudent.
Thank you, Mr. Blake. Back to Mr. Cohen for another question, this one on Clarion. Could you, and this question is also from Mr. Rose, could you shed some light on Clarion and Clarion's performance and operations in recent times? Have things been improving, worsening? Are they flat? And what are your current expectations for the future?
Yeah, as I mentioned, I think in our previous briefings, Clarion was significantly impacted by the pandemic. They had seen a significant fall off in general performance, still fairly healthy within the context of what had transpired. I'd probably now add though that Bermuda is quite advanced in its vaccination program. A number of the locations for which Bermuda depend on tourism are also fairly advanced and also beginning to open up. And the expectation for Clarion is extremely positive.
All right, thank you. Thank you, Mr. Cohen. Mr. Hilton, in your presentation, you mentioned the launch of Link, and we had a question coming from Mr. Rose in response to that, and he wanted to understand how it is being processed. Is it being processed through the Bank of Jamaica or through international processors or otherwise? You want to take it, or if I'm not sure if Mr. James is on.
I don't think he understands.
Yeah.
It's a local transaction.
Yeah. Go ahead.
Yeah, it's being processed through the local bank. Link does not contemplate international transactions at this time. It's purely local currency or locally based transactions, so everything is being processed through our local commercial bank.
All right. Question for Nadine Matthews, who specially asked that a question be directed to her this morning. So Mr. Rose has obliged. How is NCB moving to stabilize its digital systems given the increased volumes of customers transacting business using the digital channels, and in particular doing business at the end of the month. So I don't know whether Nadine, you want to take that one, or if you want to get some assistance from our CIO, acting CIO, Ramon Lewis, who is also on.
Dave, I think I'm going to invite Ramon to respond.
If Ramon is not on, I'll take it.
I see Ramon on.
Mr. Blake. Yeah, I'm on. One morning, everyone. In response to the question, we've made lots of investments in securing, scaling, or supporting infrastructure, right? We're seeing some good results thus far. We have more work to go on to work with our partners, namely Jets in particular, to further stabilize our back end. We should see improved resiliency moving forward in subsequent months.
All right, thank you very much for that response, Mr. Lewis. And I think that takes us through the questions, most of the questions that I have. Obviously, we receive other questions. We can't take all of them in the session, but I think we've taken the material ones. So any other questions that have come in or that will come in afterwards, we will be able to answer through our investor relations email box. Thank you very much, and I'll hand back over to Mr. Cohen.
Well, in closing, again, I'd like to thank all persons who have joined us for Investors Brief. I again want to express my sincere gratitude to our staff, to our customers, and to our shareholders and all other stakeholders who continue to support us during these challenging times. As I mentioned earlier, we are optimistic about the future. And as Mr. Hilton highlighted, we want you to continue to join us as we move forward to achieve greatness with the NCB Financial Group. Thank you, and we look forward to hosting you in a few months again. And goodbye.